Headphones. What about now? Can you hear me? These head. I haven't. Okay, cool. So this whole time, wow, this whole time I wasn't. Okay, cool. All right. So I thought my headphones was working this whole time. All right. Let's see. Learn where the liquidity, which is supply and demand, is at. Okay. Then let's see. Stop loss. The low zone. Take profit always will be around 15, 20 pips, depending on market structure. Okay, what else do I have? And then number three, always keep your risk management. All right. Do I have anything else? So that's the okay. So basically what I'm going over is we already like I don't know how far you're into supply and demand, but I traded off the M5, so pretty much we're pretty much scalping. We're scalpers and we're swing traders at the same time. The middle ground is like intraday trading, but in combination of intraday trading, we go to the M5s a lot to get the entry on intraday trading, and once we get 20 pips, which should be your 1 or 2%, depending on where the stop loss is at, from there, you have a choice if you want to continue to hold the trade, especially if it's an H1 demand. H1 demands are going to give you about 50 pips, but again, at 15 to 20 pip move with the our risk to reward, we'll be in and out of that quicker. So a lot of us are taking prop firm challenges, or we got our own actual account. And I don't know about you, but I like to frequently get my trades to hit take profit. I don't like sitting in a lot of trades. I mean, yeah, that sounds kind of funny because obviously I do swing trading, but I'm talking about every day at a specific time we come to the market, and like from 6 o'clock a.m. to 10 o'clock a.m. I'm looking for trade setups to give you guys. They're all M5 setups, all of them. And pretty much all of those M5 setups are somewhere around 10 pip stop loss, 20 pip TP. It all depends on where market structure is. So I'm gonna give you an example because I know you haven't you just now starting. So let's just say because I like to trade AU a lot. And this morning I was waiting on AU to come down to this M5 demand because where these two lines are at, these two lines right here are a gap. When the market created this supply, we had aggressive buying that pushed up right here. The gap will always be from that. Let me put it in here. From that wick right there to where was it? The previous wick is that one. So let's do this. Let's replay. Now imagine we're right here. Aggressive buying came out from this red candle, which automatically makes a demand. So I'm waiting for this gap to be filled in right here. What the gaps really mean is investors are pushing up, and investors want to come back to this area right here, fill this in, and then grab more liquidity to continue pushing up. So that usually happens. Like I back tested this for many series of tradings and stuff, and this is about a 75% win rate off of supply and demand. So that's why I got this little checklist right here. So AU on the higher time frames already on a buying trend. So I'm not looking for sales. I'm looking for buys on AU. I don't touch counter trend trades unless it's a break of structure, which we'll talk about that later. So we missed this trade by a hair because what ended up happening was this. So let's see if I can make this faster. This is what happened. It started to come down to fill that gap in right here. I know, like I figured that it makes the high, and I'm figuring we're gonna get back down here, and we're gonna get a rejection candle, and then as soon as there's a break of a candle of the rejection candle, which I'll show you in a second, then we was gonna get this quick 1 to 2. This was a 1 to 2 risk to reward. Now on a prop firm account, a 1 to 2 is great because you'll just be up 2%. So what ended up happening is this. It barely came down there and filled that wick in, and it left them. And I know why. Because if you go on the M15, the can from that wick to this wick, that means that gap got filled already. So now that the gap got filled, it don't really need to even have to come down to that M5. It could just blast off. And that's exactly what happened. It blasted off from it. And we missed this big move up here that I knew that was going to happen. But see, I was trading it off of the M5, which that's the, that's what we usually trade. So we missed it. If I was trading it off the M15, I probably would have called this because I saw that the gap got filled already. So it don't really need to. So the M15, so this is the M15 supply. I mean, the M5 supply. If you come over to the M15, it's actually this candle. That whole candle right there is the whole demand. So this will be a high probability trade setup. Let's take this off. So aggressive buying, leaving a gap, come back, fill the gap in, and tap the zone, and we take the break of the candle. So this is the rejection candle. The break of the candle will just be right at the top of that body. And you can either put the stop loss below the last wick for a better RR and take it up to the high right there. Or you just do what we were just, what I do, or whatever. And that would have been right there. That's a 2-to-1 risk reward. And look what happened. In 1, 2, and 3 15-minute candles, you're out the trade. You're done for the day. Go home, relax. And that's basically what I do in the morning from 6 o'clock a.m. to 10. The reason why I choose 6 o'clock a.m. to 10 is because, first of all, it's New York session. And I'm trading AU. I'm trading all US pairs. And the banks are getting involved, and that's what supply and demand is anyway. That's the bank getting involved in the trade. Now, if you don't pay attention to some of my trades, one candle or one M5 candle can hit the TP and be done for the day. And that's why I be trying to tell people to just try to have your phone buy, because some of these things can go fast because we're trading off of a higher time frame with a lot of volume in the market. So oh, what's this? Is this somebody? Oh, okay, it's nobody. Yeah, so it's a lot of volume in the market around 6 to 10. So some of these moves can go fast, and if you don't get to the setup quick enough, you're gonna miss out. Now, one of the reasons why I don't just say, "Oh, buy right here," because we've already we went through that with IML and Bruce and all that, giving you buy a UJ and stop loss this and blah blah blah. See, that's gonna cripple you as a trader. My whole idea is to give you a setup. So let's go back to here. Let's do this. Where's that setup? So my idea is to, screenshot you this, and we drill these confirmations, which I'm gonna get. I'm gonna give this out to the group, the checklist, and I tell you, hey, as soon as well, we'll do it off the M5. As soon as AU comes back to the zone, rejects it, take the break of the candle. That's all you're doing. It's so elementary. Little kids can do this. But the more you do it yourself, instead of me telling you to buy and sell, the more you will have some confidence to start doing it on your own. Now the next thing you know, you don't need me no more. Have you ever heard of a group that do you think Bruce or anyone would say that? I want you guys to get to a point you don't need me anymore. You will know how to trade on your own. And that's why we we do more. I mean, obviously it's going to be technical analysis so you can get used to it and understand what we're doing. But at the same time, we're going to do a lot of psychology because I can teach you this trading setup and it works perfect for me and it works perfect for everybody to understand it. But if your psychology's not right, you ain't going to take the trades. You're going to be looking at them like, it don't look like it's going to go up. You're going to be off, and then the trading style is going to be all messed up. And then you're going to be like, well, oh, this don't work. No, you don't work. You're not allowing it to work. And one of the things that I learned that made me a better trader and is making me a better trader in the future is we're playing a game of probabilities. Okay. This is not, oh, I'm gonna win the next trade. Oh, I'm gonna lose the next trade. Don't think like that no more. That's stupid. Don't do that. If you do that, you're gonna be emotional. We're playing a game of probabilities. So this supply and demand setup work 75% win rate. In order for you to witness that 75% win rate, you need to make sure every trade that's a part of your checklist of your strategy or your edge, you check them off. Okay, is everything in this checklist? Cool. Now I take the trade, put it in, and walk away, and don't worry about if you're gonna win and lose. We're thinking longevity. We're not thinking short term no more. That's why you got a risk management of 1% or a half a percent, and you got your TP, and everything is. Most of my trades are 2%. So you want this system to work for you by playing probability game. I'm never gonna tell you, hey, this is a 100% trade that's gonna happen. I don't know what the market gonna do. The market can break past this and then go down. Now what? So all I can do is give you a high probability setup. This is a high probability setup. I'm playing a probability game. My probability is there's a gap that needs to be filled. There's a demand. Buyers are gonna wait for it to come back down. And this is what happens. Like I said before, I do it again so you can see. It comes down, fills the gap in. We got a candle that rejected. See how the candle rejected? As soon as there's a rejection candle, you be prepared to take the break of that candle. It can be a live candle. You need to put the stop loss below the zone or put it above, above the wick, and we're going to the structural high. So as soon as it breaks, we're in the trade. You're in the trade right there, and you're done. This is a 75% win rate. I back tested, and other people that trade like this, scalpers and stuff, has back tested this for you. So you don't have to go back and back test unless you want to get a visual of how this works. Because sometimes having a visual makes you a better believer. But what we want to do as we want to robotically as possible, that's a possibility. Just every time we see our checklist and we see a high probability setup, take it with no deviations of it and allow that 75% win rate to be a longevity goal, not the next trade. If you go off of the next trade and you win 3 trades in a row, you're gonna get super duper cocky and be like, oh yeah, this gonna work every time. You're gonna put a high lot in and it's gonna burn you and you're gonna be all emotional. So we're gonna get past that type of thinking. That type of thinking will not allow consistency in this market. This market is literally random. You don't know what's gonna happen in the next move. So all expectations that come with trading have to be long-term probability from now on. No more short-term thinking. So when it comes to a prop firm, with my trading style, you should be able to pass a prop firm. There should be no problem passing for the prop firm. The only problem would be you not taking the trades or not learning the system enough to allow it to work. That'll be the only problem. The system works perfectly fine. You got to make it work for you though. That's the hard part. But It's okay. I I'm here. You can look for yourself, and you can be honest with yourself, and you can see what errors that what things you're doing wrong, and you can slowly but surely correct them through times. We're all about growth here. No more sitting here, thinking, okay, maybe next week will be good. No, now has to be good. No more next week, no more next month. No, now will be this will be your week. You know what I'm saying? That's how I look at it. So, like I said, the market is random. We got to let go of all winning and losing when it comes to following a strategy. Every strategy has a healthy amount of wins and losses. I'm gonna say it again. Every strategy has a healthy amount of wins and losses. This could have been a lost trade. It's still high probability, but it could have lost. But guess what? We got to be fine if it loses. Be fine if it hits your stop loss. Be fine if it hits your TP. Just follow the game. So consistency comes from following out these plans, following out your checklist and everything with consistency of a long-term goal. Your edge. So when I'm talking about edge, it's not just this checklist. It's the true simple fact of trading supply and demand. If you don't understand supply and demand, the way I'm looking at it or whatever, you can all I mean, I got it right here. It's a high probability trading course. I made this course, and you can go over it as much as you want to understand what I'm looking at in the market. I tried to make it as easy and as elementary as possible. I think it's 5 videos. So the first video is about the proper type of supply and demands that I'm looking at. Because not all supply and I mean, not every supply and demand is worth taking, obviously. Then you got gaps where I'm going over what a gap is, because I'm sure you're going to hear me say gaps a lot. I kind of gave you a hint to what it was. And points of interest. Gaps and points of interest is important. If you understand that with the supply and demand, you already halfway there. Then you have what supply and demands to trade off of. That's basically like if you're on the uptrend, what demands am I looking at on the uptrend? If you're on a downtrend, what supply am I looking at to take on the downtrend? That's important. If you don't know what you're looking for, how can you trade out a plan? I mean, how can you plan to trade something? You know what I'm saying? Then you got fresh new demands and supplies and liquidity grabs. That's really important for smart money concept, because supply and demand is a part of smart money concept. Smart money concept is basically what the banks are doing. The candlesticks show you what the banks are trying to do. Obviously, in one of these videos, I show about volume. Volume indicator shows you when the banks are getting into the market. So all of that's on there. On that, I think on this video, if I'm not mistaken, if not, just then you have swing trading and going to lower time frames for entries. That's me explaining how I take swing trades. We're in a swing trade right now. I don't know if you took it. That GBP, well, that CAD Swiss franc, that's a swing trade that I've been waiting on for 2 weeks. I've been telling them about that for the last 2 weeks. I told them once it gets down to this demand and we get a break of candle, we're getting in. So I'm gonna show you what I was talking about with that CAD Swiss franc real quick. So we're in this trade, CAD Swiss franc. Let's delete all of this. So what do we see? We have the market coming back up, and then it comes down. It failed to make a low. You see, it didn't come lower because it's been drowning. So it pushed up, came back, and started wicking and failing to make a low. So when it comes to a demand, the demand candle that I'm looking at is this one, or it could possibly be this last one right here. Either or, there's the demand. Now we got that beautiful W off of the demand, and then we made a high. This high broke this candle right here. Because if it didn't break this candle, it just start breaking down. So we have a break of structure. That's when I put BOS. BOS means break a structure. When it breaks the structure, then it's ready to pull back. So this is when I'm coming over here to the daily. So break a structure, and then we had that wick back down there to the demand zone on the daily, and it pushes up some more. So now at this liquidity is when we got in. When it starts making highs, low, higher high, lower low, you should expect the higher high. And that every lower low is a demand. So there's going to be a demand. So basically, it's going to be like this. So once this makes the higher high, then it's going to pull back, and then it's going to consolidate right here and then continue up. This consolidation will create a new demand right there. Your anticipation of a high, pull back, create a new demand, new high. So when it makes this new high, you can anticipate that if it might come back down to a fresh new demand, and usually that's what happens when it comes back down, you could get another entry. Where's this thing at? Right there. So it'll pull back down to the fresh demand, and you'll learn about fresh demand. And when it comes down there, it might consolidate, might liquidity grab it, do whatever, and then it continues to go up. This is the swing trade that we're in, where I think at this point, see when it slammed down there, we took it off the hour. So that's the rejection candle right there. This one, as you can see, it liquidity grab at the zone. Actually, the zone is lower. It's actually right there. For the H1, that's a H1. The one I had like this is a higher time frame. But see, it wicked all the way into the H1. So guess what it did? It collected money. It collected money off this demand. So as soon as that rejection candle came in, I told you guys, or I told them, you're going to learn eventually to take the break of the candle. We took that break of the candle, and look at this move. We're up 23 pips so far. And I'm anticipating for a new high. So TP1 is at this high right now. TP2 is where the supply is at. If you come all the way up here, what made this downtrend in the first place? It's probably on the H4. Let's see. It's right there. So that is the supply right there. And it's a fresh supply. So this should come back up here. And guess what's going to happen when they come up there? It's going to reject, because this is a fresh supply. It hasn't been tapped in yet. So when it come up here, we're going to take the sell. We're going to look for a sell off here. But right now we're anticipating. It's a probability game. This possibly can't go all the way up here. Maybe it come down and crash, but we're taking the probability that that's what's going to happen. It's all probability. I didn't say this is going to happen. This is a probability to happen. Let me get this big giant thing off here. So hopefully that's making sense so far. This is just a classic reversal to come back to the supply in which the move already came from. And you can look in your eyes and you can tell with your eyes what it's gonna do, but we're still not trying to predict the market. We're just trying to react to the market. This is a reaction trade, anticipation trade. You know what I'm saying? So where were we at? So we want to learn how to trade with a carefree mind. And that's where the only way to trade with a carefree mind is to look at things in probabilities. Like, for an example, there's a group of people out there right now that have a large lump sum of money and they go play blackjack at the casino. Now, your average person will go play blackjack at the casino and lose all their money. But there's a group of people that make a living off of playing blackjack. They take 1% of their money and they have a strategy that works for blackjack. And what they do is they follow that strategy to a T. And they play the probability game. and they make their 1 or 2% a day, and that's what they do. That's their job. It's a small group of people that do that. So what traders did, they took that idea from blackjack trade players and added it to the market. The market can be a scary thing. You can lose your money here, but if you manage your risks, which is adding a plus to you, have a trading style that's adding another edge to you, actually following the trading style, which is psychology, that adds 3 edges to you. Now you got an edge over the market. So now you got to take that edge and trade it every time you have your checklist met. Now, one of the things I advise, once you start, once everybody start trading on their own, which that day will come. Oh, trust and believe it. That day will come when you start taking these trades on your own. Have a journal. And I don't need a journal because this is my journal. I come back here and look at the trades that I did take, and I just put it on a on a Microsoft Word thing, and then I said, hey, I took this trade. It matched up with my with my edge. And once you put a trade in that matches up with your edge, take that as you won. Don't matter if the trade wins or lose. You followed your edge. That means you're a winner. Now, if you look at the market and look at it from that perspective, you wouldn't even care if you lose if you go on a five trade losing streak. Who cares? Continue trading your edge that you have over the market. In the long term, you'll recover all that money back. You might not recover it back on the short term, which that's what we usually do. We'll lose 3 or 4 trades and try to put a high lot in to try to get it all back and blow our account. That's counterintuitive. So when you go on these drawdowns, is what I call them. I don't even call them losses. It's just the market is holding my money at this point. When you go on these drawdowns, just know if you follow your edge and keep that edge over the market, you'll get that money back. It's no big deal. So that's the psychology that I want to drive home for all of us, because we didn't get that psychology in IML. We didn't get that psychology with Bruce. We didn't get that psychology anywhere. And we didn't get any accountability or none of that stuff. We didn't have somebody, like, no signal chat that I've been a part of told me, hey, I'm gonna teach you how to trade. We're gonna drill this in, and I want you to one day to get it and you don't need me no more. Most people are like, no, keep paying for my signal services. I don't care if you blow your account or not. I want the money. I don't care about the money. What I really care is, are you guys learning? If you're not learning, then it's like, I'm trying to figure out how I can get this to get you guys to learn this. Because honestly, and I'm being true to the core, if I can get this system down, that means y'all can. Because I was one of the most laziest motherfuckers in town when it come to trying to do systems and stuff. And all of a sudden, I'm doing it. If I can do it, all of y'all can. It's just, how bad do you want it? How bad are you going to assess yourself every day and be like, where am I at? Where can I be? Am I still emotional trading? Am I still FOMO trading? Let all of that crap go. That never works. It's never going to work. You'll continue paying for trading services, hoping in one day that you'll get a prop firm account, thinking like that. We don't want that type of thinking no more. So yeah, so we're gonna learn to trade carefree mode. Think about everything in probabilities. No more trade to trade mind. We don't know what the market's gonna do, and the market is gonna be always gonna be random. But we're gonna keep that edge over the market, and your win to loss distribution with any trading style is gonna be random. But for some reason, if you just go ahead and let it be, you'll be profitable. It sounds really counterintuitive, but I mean, see, I what I did is I deleted the other signal thing from 2022. But your brother, Matt, your brother was here in the beginning. That was for 4 weeks straight. I went 4 weeks straight, not losing one trade. And I didn't think nothing of it. I was just following the strategy, whether whether I didn't feel like trading or not. I followed the edge and allowed the market to be. Hey, 4 weeks in a row, every day we was hitting it. So the last thing I want to talk about, I want to see if I can illustrate it. Let's do it this way, because this is going to be just as important. Everything's important, but all right. So what I'm gonna start doing is making sure all the trades are 2-to-1 risk to reward as possible. So that's 5 days, one trade, or maybe I have to trade two because we got somebody from Australia that it's hard for her to get up and trade New York session. So we'll trade 2 trades a day, obviously. So I got to look for GJ tonight before London session comes and give her a setup, or give her, because she comes and she asks this question with her husband and all that. They are putting the energy in, and now when I give her a setup, she knows exactly what to do. That's how I want everyone else to be. She's putting the energy in and she's getting it. She got her a live funded account taking my trades and taking her trades. She's funded on two funded accounts, a 10K account and a $5,000 account. So she's starting to see, oh, this is working. She's almost to the glory hole. But yeah. So what I want to do is make sure that all the trades are 2-to-1. Now let's just say hypothetically I'm trading just Monday, Tuesday, Wednesday, Thursday, Friday, 5 days, 2-to-1. If I win all 5 trades, that's 10%. That's a 10% gain. If I lose just one, well, let's see. Yeah, if I lose just one trade out of that 5, that is a 7% gain for the week. If I lose two, well, no, 3 of them, that's a 4% gain. If I lose, what is that? 3 of them or 4 of them, I think. What is that? I'm at 4, right? 1, 2, 3. Yeah, if I lose only 4 of them, that's only a 1% gain for the week. If I, how is that a 1? Yeah, it is. Let me make sure this math is right. So -3 plus -2, -1, break even. Yep, that's 1%. So if I lose all of them, I'll be at -5%, which you're in 5% drawdown. Never ever, like, eventually, once you get this edge down, you'll never get to a point where you lost all 5 trades a day. And the reason why I say only trade one trade a day, once you get to a point where you're trading, because all you need is one good trade a day at a 2-to-1 risk reward, and you're good. So I'm somewhere around this 4 to 7%, anyways. So that's how we're gonna keep it. Even on a bad week, we'll still be up 1%. If you if you only win 2 trades out of the 1, 2, 3. So you missed 3 trades out of the 2. How does this? Something's off. Let's see. 1, 2, 3, 4, 5. Yep, I got it right. You would think, okay, I get it. All right. So 5, 4, 3, 2. Only win 1. Yeah. So yeah, 1 was missing. This is 0. This is 3 trade. This is 3 trade that you only won 2. The one in the middle is break even. There it is. I was looking for that. So it's win all, win 4, 3, 2, 1. None of them. We want to stay. Honestly, you just want to stay away from these 3. So the only way to do that is just take the high probability trade setup and make sure your checklist is off and your edge and everything. Understand all of that, and we'll get somewhere around the 7 to 4, and even the 10%. We'll stay in that range. That's the range we want. But See how the risk to reward is in favor of you and not the market. We don't want anything in favor of the market no more. So in order to stay out of the favor of the market, you have to keep this edge. Otherwise, stop trading, go back to work. Well, we already working. It takes a lot. That's another thing about trading. I still work. You know why? If your 1% ain't even enough to pay your monthly bills or even pay your rent, and you ain't got a savings in your account that's enough to deal with your life expenditures, then there's no point of leaving your job. So let's just say my rent is $1,000. My 1% needs to be $1,000 at least, so I can pay rent with 1%. And I should at least have like 10 or 20K sitting in a bank account just in case I have a couple of bad weeks where I'm down -5. Not saying I'm gonna do that, but just in case. If you ain't got no bag up money from your withdrawals from these prop firms and all that, and some money in the just in case you have a bad month or a bad week, then you gonna have to stay at your job. It is what it is. I've seen somebody pass a prop firm account, get a 100K account, quit their job, only get a couple of withdrawals and blow their account. They right back at work. I wouldn't even rely on a prop firm to live off of. The prop firm is to obviously withdraw and do what you want to with it, but I would take that money and go get a regulated account with Oanda or IG and start trading on a live US regulated broker. These little brokers, like the brokers we got right now, they're cool and all, but I wouldn't be banking 100K accounts with them, 200K inside these trading accounts. A couple of thousand here and there, that's cool, but big money, we're going to US regulated. So if you can't come over to the US regulated account and put 50 to 100K in there, and then you ain't got like 25K sitting in your bank and some other stuff going on, guess what? You're stuck at your job until that happens because you're not ready. Trading is not easy. I'm going to say it again. Trading is not easy. It's hard, but you got to do it hard. And that's why you got to keep this edge. So I know you're new. So if you got any questions or anything, let me know now. If you got any questions about that.
No, I'm good now. Where are those videos at? That's what I need to know.
Oh, the videos. If you look, is my screen sharing right now? Can you see my screen?
I see your chart.
Oh, you only see the chart. Okay.
Well, I see your chart and your pairs.
Okay, let me do this. I hate when my screen does this. Let's stop the share, and then let's go back into the screen. And okay, so on there, where is it at? High probability, it say it right there. High probability trading course. It's these buys right here.
Okay, hang on. So, okay, high prop trading course.
Mm-hmm.
Okay, that's what I needed. Oh, I do have a question.
Mm-hmm.
So, well, you need 25K for a regulated.
I think for a regulated, well, the minimum is like 10K or something like that. They're not gonna let you just put like a couple of thousand in there and trade for some reason. I don't know why they're like that. Maybe they changed it. I don't know if they changed it, but yeah, you need a significant amount to trade on a US regulated bank. I mean, broker. these little other brokers, oh, you put $10 in there, yeah, they don't care. They think you're gonna blow the account anyway, so they don't care. But we want to
Right.
get serious. We need some serious money.
Right. Okay.
Yeah. The prop
So
firms are cool and all, but I mean,
what
eventually,
about that Hanko trade?
Hanko trade is cool. I mean, I know somebody that has a six-figure account. I know a few people that have six figures in there, but even they'll say, like, the one guy, he's like, I still have the most of my money in a U.S. regulated account.
Right.
Yeah.
Um, okay. Yeah. So I was just, that's where I was, because I'm not big on the prop firm deal. I just, for some reason, I don't fucking like it. I don't like the idea
I
of
don't
it.
I don't like it either, to be honest.
Um, I'd rather just, take my measly $500 and build it to where I can build it. I have a different situation than most people where I don't really need this money. Um, until, I move it over into a regulated account.
Hmm.
Um, I do have a lot going on though. So, and I don't know if you've talked to John lately or Anthony. I'm not sure what you know him as.
Anthony,
Uh,
yeah, yeah.
um, so like he started a side gig, you know, he's got his job. He started a side gig. I'm retired. I've side gigs coming out of my ass. Uh, and I don't know where are you at? Like, where do you live?
Oh, I stay in Chicago.
In Chicago, right?
Hmm.
So I don't know how regulated things are there for side gigs or whatever, but I mean, Sunday I had a power washing deal fall into my lap for $300 for a couple hours.
Oh, nice.
Like it just happens if you have the equipment, and I don't know, your living situation if you have a place to put the equipment or not. I'm waiting for a goddamn snowstorm. Uh, uh, I bought a I bought a snowplow. And we're in Oklahoma. It's not. It might snow twice, but if it snows twice, I'm like quadruple my money.
Nice. Oh yeah,
um.
you guys are from Oklahoma. Yeah, I'm originally from Missouri, St. Louis,
Oh, right on. How are you liking Chicago?
Missouri. It's kind of fast paced, and I'm not used to it.
Right.
Yeah.
Right. Um. I don't know how much you're into side gigs and running your own business or whatever, but
Oh, I'm into it.
I know you got your hands full with this deal, but
Uh, I got it where I'll make it work for me. I can just stare at the charts for a couple of seconds, see what I need to see, put the trades out, go on
right,
about
but
my.
you still have calls and stuff for
Yeah, yeah. That at night. Yeah, you're right.
um it's just there's even in the markets, when I was trading, I don't know why I quit. Oh, I know why I quit. I got fucking bored. But when I was trading hard before Bruce went his own way, and I wasn't even really using Academy or the Academy. I mean, I had the Academy, but I wasn't really using it. Dude, and I was probably not managing my risk very well, but even on a basic trading strategy, I was doing